Okay, well, let's move on to the in focus section.
Okay, so as we flagged earlier, we've got Eurozone CPI data next week, and the question is, is this showing us a success of QE or otherwise? And I think the answer is otherwise. Despite almost 8 months of ECB QE, we've seen little improvement in GDP or any increase in inflation across the Eurozone. And in fact, GDP has turned lower and inflation has dipped below zero and remains in a downtrend. ECB Chair Mario Draghi warned on risk to the downside to the Eurozone economy when he spoke to the European Parliament earlier in the week. And the chart here, fairly self-explanatory. EU inflation is the blue line. The EU GDP growth rate, or Eurozone GDP growth rate, I should say, is the dotted line. And you can see that whilst we have had a pickup in GDP since mid-2013, we've actually started to see a decline again, and that decline obviously comes when the ECB is pumping 60 billion euros a month into the market. And at the same time, despite an attempt to rally as far as inflation is concerned, we've turned lower again and indeed remain in a downtrend, which I've annotated here with the dotted red line. So I think the answer will be that there won't be any surprise to the upside in CPI on next week, and we will ultimately hear the ECB doing something sooner or later. So the December meeting is probably the time when they'll announce the plans, what they for extended QE, for a variance of where they're targeting the money, for how much money they're actually pumping into the system. There's another conversation to be had, of course, as to whether that will actually achieve anything. And I think the answer is that
we agree on no, I would suggest.
Yeah, I think we do, because the likelihood is we'll see a diminishing return as we have with Japan. And I think what we need to see is politicians act and use fiscal stimulus and try and get the economy going in the real world rather than in just in the vague monetary background.